First of all, I want to get a perspective on the equity space. We've seen the market rally quite a bit. 8-day rally we're seeing now, although many will say it's really on thin volumes or moderate volumes at best. Your thoughts on the extension of this rally? Because I think it's a bit of a surprise. I think many people thought that we'd see this market come down a little bit after the earnings season, but that's not playing out right now.
Yeah, that's very correct, Wole. I think to give some perspective to this, in the last 5 years, we've seen the market do very badly in the third quarter. That's from 2007 to last year anyways. And we saw 2011 and 2009 as the worst year and worst quarters during this period. Like the market was down about 18%. Also, what we noticed from our trend analysis was that August typically was the worst performing month in this last 5 years. So looking at what happened in July and then what happened in August, the market was up about 6% in July and then 2% in August. It's safe to say that we've turned the psychological corner, so to speak, in this dispensation, so that there's not much. I think investors might get a bit more comfortable towards equities in this cycle, given the fact that we've not seen the kind of bearish trend that we saw in the last 5 years. And so, like you said, prior to our expectations was that we'll see a pullback in prices going forward into September or even from August. But since that has not happened, I think sentiments are getting a bit whipped up at the moment, more so as the foreign investors are really taking positions in blue chip stocks in the market.
Okay, maybe I should ask that. Where do you see the market going from here on? Your thoughts on a further extension of this rally, or do you think we're due for a mild correction?
I think there's still some upside room at the moment, though I don't expect to see the kind of gains we saw probably in July and in August. I think we're going to close the month probably positive, but slightly lower than what we saw in August for the following reasons. Basically, what's happened in the fixed income space, especially in August, probably would favor equities going into September. We saw yields, drop drastically towards the end of the month, and for some maturities, like at the longer end of the curve, we saw the yield even drop below inflation rate. So my sense is that if real returns are kind of being trimmed in that space, then you might see investors naturally flowing into the equities market in search of better returns on their investment. So I think in the near term, we might see a lot of funds coming into the market to support prices. Aside that, I also think that there's been a lot of worries about, a lot of speculation that we will see some selling pressures coming through to the market, most especially on the back of the gains we had seen earlier on in the quarter. We've seen the banking sector up about 18%, berries about 19%, FBT about probably 16.5% as well. So it makes sense maybe for speculators to come in and take some gains. But the interesting thing to note is that this rally has been really supported by foreign investors who typically have a medium to long-term holding period. So I don't think, yes, there will be a little bit of selling pressure coming to the market, but I don't think it will be sufficient enough to result in a significant pullback in equities prices, at least for September.
I think you make a significant point about where the bond prices are, and like you mentioned, in the longer end of the curve, we're seeing some of those yields closer to about 12%, which is, of course, under inflation. Your thoughts on the sustainability of the bond market rally? Of course, we know it's all about the JP Morgan index effect, that Nigeria is now in that basket, that many investors are now looking this way to invest. So your thoughts on the extension of that rally?
Yeah, from what I've read...
because it's come down a little bit over the last 2 days.
Exactly.
You think it can get going again?
Yeah, like you said, we saw an uptick. Like as of yesterday, yields kind of were up but slightly from August end anyways. But from what I read, people are estimating that we're expecting a total of about $1 billion USD inflow into the fixed income space on the back of the JP Morgan story.
So you think that when that allocation, if you like, is filled, we may now see that demand wane a little bit?
Yeah, of course. I mean, but the interesting thing to my mind, I want to imagine, since the JP Morgan stuff is like an index, or it's an index more or less, and from my understanding of the way portfolio managers work abroad, you might have a lot of passive funds benchmarked to this index, or if you like, index funds. So going forward, I see increased activity in those bonds. That's the 5-year, the 7-year, and the 10-year bonds going forward, because I mean, portfolio managers who decide or who basically have a passive fund indexed, to this JP Morgan emerging market government bond index would periodically have to continue to rebalance their portfolios based on even how the other constituent bonds in the portfolio, behave. That's the foreign bonds in the portfolio and other emerging markets as well. I think they would constantly have to make forays into the market in and out, anyways, depending on how the other bonds in the basket behave. So I think going forward, we will see. I don't want to use the word volatility, but you see increased activity in these bonds going forward.
Yeah, I think one thing that's clearly driven this demand, or should I say interest in Nigeria's bond market, is the stability we're seeing in the exchange rate. And I want to get your thoughts on that. We've seen Naira actually gain year to date. Over the last few months, it's really been fairly stable. I think, contrary to many people's expectations, especially after the MPC, we saw some volatility there. We've seen it really, really stable right after that decision. So your thoughts on the Naira and where it's headed?
Well, again, going back to the expected inflow, I think we'll continue because last month a lot of the supply that was that came into the interbank was from the foreign offshore inflows coming into the fixed income space. And since we still expect that to continue, I think supply would continue to be kind of buoyant, at least in the near term. Also, autonomous dollar inflow from sales by multinational oil companies was kind of high last month. And if that is sustained going forward, we should also continue to see some support coming through to the Naira. That's in September at the interbank market especially. But the risk basically is that if things, turn a bit, if we check the flip side and maybe investors have to pull out, especially given the volume of the inflows we've seen into the fixed income space in the last 2 months, then we might see the Naira coming under pressure again. So I think in the immediate term, the Naira is kind of safe at these levels. But if there is any reason for investment repatriation, for instance, to happen, then we might see some pressure coming through to the Naira again.
And of course, one thing that's always supporting the Naira is the high oil price. We're seeing it really, really steady above $100. Very good place to be. And of course, we know reserves as a result have been inching up, although I think many people are expecting them to move much higher than that. But maybe let's end this with your thoughts on where the Naira may trade over the next few weeks. You think it's at 158.20 in the interbank today? You think it's probably going to be at that level?
I think so. I mean, the 158 range, probably slight appreciation in the next 4 weeks.
Yeah.